Welcome to the review of our Tuesday, May 6th. It was quite an interesting day. Last week we finished most of the big tech earnings, and today pretty much finished it off with Palantir reporting a record profit. However, losing 12% uh, today, and gaining a little bit in the after hours, roughly 1.5%. But when we look at the past week, okay, fine, it underperformed. However, in the past month, it's up 52.57%. And you will see that this is actually quite common for this company. As you can see, just incredible swings, just very, very volatile. Has been doing well since the beginning of the year. Um, During the past year, it's been up 3.5 times, really. So quite impressive. Um, I personally don't own it. It is very volatile. I'm not an expert in what it is that they do, except joining the words AI and defense, as well as setting out, I guess, to what's it called, dominate. They want to ensure Western dominance. Anyways, yeah. Besides that, I don't really know much about the company itself. I know the CEO Alex Karp has quite some interesting hair. He looks like an evil version of Taika Waititi, the movie director from New Zealand. Um, but anyways, so Palantir clearly uh, disappointed when it comes to forward guidance. However, its earnings were extremely strong. So I'm not fully sure what the investor sentiment there is, or at least the reasoning. But looking at today's top gainers, I mean, hims and hers has just been on an entire rip. They've they've been propelled up and up and up. And when it comes to top losers for today, I don't really know many of them. So I just want to focus on the top gainers, and here specifically hims and hers, just because we've been already following them since starting uh, this series. Um, and I mean, yeah, 21% today, uh, 40% almost in the past week. In the past month, it almost doubled. Now, year to date, again, we see that it had hit 69 roughly dollars per share at one point earlier in February, and it still sits at pretty much exactly half of that. Um, so again, another company where while I am familiar with them and with their products, I am not necessarily sure um, what their long-term strategy is. To me, what I've seen so far in ads is that they sell medication for erectile dysfunction, um, weight loss, and yeah, hair loss. So in a sense, the HIMS part of it specifically of the company focuses on, I guess, male attractiveness, and then the hers part of the company. I know that they also sell similar, I guess, supplements and medication for women. Um, but but besides that, I really don't know. That they kind of are everything that is wrong with really the field of medicine, because none of these things are you know, life-threatening things. They're all uh, cosmetic, and it reminds me of plastic surgeons that point out things that are wrong with your face, wrong with your body, and keep you as a client for so long that they eventually turn you into a weird alien looking Barbie doll, right? So, anyways, that's my take on HIMS. I am not an investor in this. Yeah, I don't really know much about it. I don't necessarily love what the company does. But then I would want to. Okay, so today was mainly a loss overall, but I'm seeing some positives in the after hours. I do think that that's because of the company I got during its IPO, CoreWeave. It is an AI infrastructure related company. Um, yeah, it's up 27% today. Again, this is a company that just had its IPO. It had already hit 61. I bought it when it was at $39. Um, and I I do believe in the company. I bought it at $39.1. Um, I didn't put that much in. I only got 10 shares out of it, so roughly $400. Um, Again, I do think that they find themselves in a great position. Earlier on, they focused on crypto mining data centers, and now they switched to AI before going public. I think that this is beyond the hype cycle. I do think that they're positioned to accommodate growing compute demand due to AI. So I see that as a solid investment. I do also know that it will be extremely volatile moving forward. I wouldn't be surprised if it's $10 a share in a year. But over the long term, I do think that they will do well. Now another bit of news is that Main Street Capital, they just announced a dividend increase. So as you can see, per share, they used to pay um, 25 cents. Now it's 25 cents and, 25 and a half cents. Uh, I actually don't know how that is usually paid, but they also announced a special dividend of 30 cents per share. I am looking to pick up some more. Just know that if you're investing in this company, um, they are a business development company, meaning that loan, they give out business loans to small and medium cap companies, specifically small cap companies. I mean, most of them are not even listed on exchanges, and they pay out most of their earnings in the form of dividends. So when you look at the valuation itself, it's not necessarily going to change too much over time. Sure, the past, I mean, year to date, they lost roughly 11%. Over the past year, they gained 5%. Now, expect plus or minus 15% move on them. However, as you can see, I mean, for 15 years, it doubled. Not really that impressive. Um, Still, though, I would say if you are interested in dividends, then I would definitely look into them because, as you can see, they have been increasing their dividends quite well. Um, and they pay monthly. That's also something that I should mention. As you can see, they pay roughly on the 8th of every month. So maybe you could take that as the end of the first week, or sorry, the end of the second week of each month. So roughly the 15th. Uh, but then they also have occasional special dividends. They're usually quarterly, um, but they specifically pay those out if they're doing well. So they tend to grow their dividends, but then when it comes to the special dividend, I believe that in 2020 they didn't pay it, but then the year before they did, which is why there was a seeming drop. So these bar charts, they take into account the full dividend history, the full dividend payment of that year. But when you subtract a special dividend, we actually see the 2020 result. So yeah, just so you know, they also didn't pay it in 2022, which is why the jump from 2021 to 2022 seems not too drastic, but then 2022 to 2023, you see a much more significant increase. So just to keep in mind, I personally really like this company. And then I'm getting around to completing my second share of ASML. I'm waiting for it to drop a little bit more. I bought my first share at an average of $720, I believe. And as it's been falling, I've been trying to knock off a bit more and more. So right now, my average cost is down by $30, so from 720 to 690. And as you can see, this is a discussion on how ASML's, even though its earnings per share increase, the stock price sometimes deviates from that. I mean, as is expected. However, this is quite a significant deviation, especially when they have back orders. So again, a company I believe in. During the gold rush, the people who were guaranteed to make money were the ones selling shovels and pickaxes, right? So these guys are pretty much in a duopolistic dance with Applied Materials, AMAT, which I also own. And yeah, they're the shovel and pickaxe salesman of the semiconductor industry. So I definitely believe in them, specifically because they have a great track record. My background is in materials, and I know just how technically insane it is to build an extreme ultraviolet photolithography machine. Uh, so, yeah, nothing short of extraordinary. Now, besides that, I also got a dividend payment from SGov, although it might make more sense to call this an interest payment instead. Um, so yeah, this basically tracks the rates set by the Fed, and uh, they have recently been dropping their interest payments or dividend payments. It pays monthly simply because it also compounds monthly. And you can see in the pricing, this might be a little interesting for you guys. Um, so, on a monthly basis, it always starts at $100, and then it accumulates in its interest, distributes it, it starts accumulating again, distributes again, and so on and so forth. And this is actually a great visualization of how dividends, paid dividend, actually kind of comes out of the share price. Obviously, the mechanics are different, but I like the visualization aspect of it. Now, yeah, I mean, today was also just not that interesting of a day. Um, right? But when I look at May, yeah, so far these were my two dividends. Now, because I invest on Robinhood, I actually did not get the, you know, this exact dividend amount. instead I got a bit less. So when we see here,